6,000 options on the call side and 6,000 options on the put side. What does that mean for Roblox? RBLX, is this bullish or bearish? Today is May 12th, 3:19 p.m. and we are going to analyze these 6,000 unusual options that are clearly opened orders because they're greater than the current open interest. You'll see here, greater than that open interest. So when we look at the options tape, you'll see that actually it doesn't show up except for this here for only 157 contracts. But we know there's a lot more. And because we detected these very unusual up to 6,000. And so after we detected these, we started to filter this out. And so that's what we have to do. We look at the June 9s, and there it is. You see lots of these coming in at 2:09 p.m., 2:14 p.m., 2:43 p.m., all in less than an hour ago at 2 o'clock. So make sure if you're subscribed, you have that bell icon to notify you whenever we see unusual options and we upload these videos. You will be informed of these insights right away. So what it looks like is that they are buying the 34 puts and selling the 44 strike calls. And what is that? Well, that is here we can analyze that trade, buying that 34 strike and selling the 44 strike calls. And when we analyze that, this is what it looks like. This is a synthetic or a collar. So keep in mind that collars could actually also mean that they could have stock and that this is a hedge. Because as you can see, when the price goes down in price from the current price of $38, this will be profitable. And so it keeps their stock from losing price in profits, in value, because this is here is the profit loss. Anything above this is profit and this is loss. However, if they have shares, if it goes above this, the 44 strike call, they would just have their shares taken away and they will not necessarily be at a loss. So keep that in mind. However, if they don't have shares, then this is a short position on Roblox. So the way that we are trading this is slightly different. Okay, so our trade is something a little different. Instead of buying those 35 strike puts, we sold the 34 strike puts, as you can see here. We wanted to sell that 0.51 extrinsic value here. And so once we sell that, we then went to the next expiration in June 16, and we bought the 35 strikes over here for 0.9 extrinsic. So we cut our extrinsic value basically in half already. And so this is what we did. And here it is. This is our trade. It is a diagonal trade. It is a bearish diagonal trade. You'll see here. It's only going for $39 at this time. And so this is a bit more, a lot more, actually more cost effective, because to do a trade like their synthetic requires a lot more buying power. And if you want to figure out how to figure out that measurement, you can click the link below. We'll put a link. We made a video on how to calculate buying power very quickly. But it's definitely not going to be just $39 for this synthetic trade because you have to sell a naked call. Now, for our trade, you'll also see that this is a short position because it was above the zero line. Once it starts to go below this current price on the x-axis, it goes down from the $38 range. If it starts to increase in price, it will lose, but we will also start to take some of these trades off to cut our losses if it's not going the right direction. And so our Greeks on this trade is just very slightly negative theta, and it has that positive vega, which is what we want. We want a positive vega because Roblox is trading currently at, let's see here, 1% IV percentile. It's so low that we think there's a lot more potential for this to increase, this IV to increase, so that our trade will benefit with a positive vega, which is volatility. And so that's why we want a trade with positive vega. For their synthetic trade, you'll see that it is actually a negative vega, and that's why we didn't particularly like this trade, because we are already at 1% IV of a percentile. How low could it go? It could go lower, but it's less likely than going the other way. So that's why we wanted to go with this trade. And this trade doesn't cost as much as we mentioned before. Currently, it was only going for $39. And if we look at the chart on Roblox, you'll see that it had rallied ever since earnings, but it has come down today 2%. And so will we hit back to support? That's quite possible, because that is that range, the strike price range that we are targeting is that 35, 34 level over here. And so that is what we're looking at for Roblox. If you found this helpful or you enjoyed the video and you learned something, please smash that like button and comment below on what you think about Roblox. Do you think it's going to go back up and fill this gap here, especially this gap, that gap down? Or will it go down? Let us know what you think about Roblox. And take care, everybody. Subscribe if you haven't. And have a wonderful weekend.